My dear friends, welcome to today's video. I got my coffee today. It's going to be a short one. Seems that this market is more sensitive to news than I am to shrimp. And it's a yo-yo where one day we think that it's going to go and keep going, only to come the next day and to see that everything is getting reversed and pushing in the other direction. Trump tariffs and Greenland and Davos and what have you. This is the world we live in. So we did get a pretty good bounce, and it does seem, if I'm looking from the top panel to the bottom panel here, from Qs and the S&P and the Dow, that we are closing, or we have closed above yesterday's high, which again came after a pretty serious gap lower. So the market, it's not ready yet to continue to sell off in an aggressive manner. At some point today, it created a bounce and then it sold off, and then as soon as the news of some kind of a deal and some kind of a reduction again in tariffs or an elimination of them hit the tape, the market rallied and then sold off a little bit into the close. The only market that's still below, although I could say it's right there at the 50-day moving average, is the Qs, and the S&P and the Dow are above their 50-day moving average. So markets are fighting in here to continue to look for some kind of a positive. Now, we're not out of the woods. Clearly, we need to make a new high before that would happen. So we'll see how we're going to react tomorrow. Who knows what other tape bomb we're going to get, or if this is just a dead cat bounce and we're going to continue to go. Nothing that we've talked about really has changed in terms of the way some of these sells have been happening, some of these buys in gaps. It's everything. It's still up there. It's just a day of action in here, a couple of days of action. So we'll see where this goes. But as I've said in the video yesterday, I could come here today and just see a market that is reacting in the opposite direction. And I kid you not, this is where we're getting. So that's the nature and the structure of the market. Anyhow, I'm going to be watching if this sell-off it's actually a wave two, right? It could be a wave two, and I'll take you to the counts and show you what I mean by that. The idea of this whole count was that, yes, this was an ending diagonal. We're breaking lower, and we're beginning, let's say, a larger corrective decline in some kind of a wave two, maybe a larger wave four. It could be a running triangle. I don't want to get into, again, a bunch of details, but if it's not this, and the market, for example, if it takes today's buying as a serious reaction and yesterday's sell-off was just a head fake, and they want to take it, and they want to take it above, let's say, these levels, then we would be looking at this move as being a wave one. That's what I would go with this, and an impulse. So we would start from here, and instead of an ending, you would go to some kind of a leading, and then 3, 4, and 5. Now, since the structure in here, it's not as cleanly looking for an ending due to that, three-way formation in a leading diagonal, each impulsive leg. I mean, each impulsive leg of the move, for a lack of a better term. So each wave ones in threes and fives. In an ending, they're made out of three waves. In a leading, they're actually made out of impulses. So you could have that, and then get this overlap. And again, the literature is not super clear on this in terms of the way that a leading structure, that a leading diagonal is actually structured. I guess maybe these were some modification maybe made by Robert Prechter. I'm not too sure. But there is this thing out there that in a leading, you right, you have impulsive moves in each of the legs in the 1, 3, and 5. So anyway, if that's the case, then you would say, okay, well, this is a wave two, or maybe the wave two can still kind of work itself out, or another ABC, and then you would begin the next leg. Well, that would completely invalidate this wave one, and we would be looking, I guess, to the next sequence. Maybe this wave one red goes here, and that's another wave two, and then it's another one, another two, and then you go. So again, you don't really want to fight a market that continues to go and let's say ignores everything else that you're looking at, no matter how sure you are about the things that you're saying, right? If the price says, I don't care about anything that you're looking at, I don't care about anything you're saying, I'm going to continue to go. There's a lot of other I don't know, let's say column traders, investors, what have you, and they say, well, the market has not agreed yet with my view. Like for example, I could hear back in the day Peter Schiff, the crazy guy with the gold, which he's probably laughing all the way to the bank now with his gold and silver. But he was saying like, I'm not wrong. I know what I believe in. I know and the market has just not agreed to my view yet. Yeah, but you can stay. How do they say that? Right? You can stay. The market can be irrational more than you can stay solvent, and that's that probably happened to all of us, or to a lot of us, I guess. Where you have a tendency to fight a move, and then you find out, oops, there's no more money to fight it. So anyway, that's what I would go with this next. And if we're pushing about 69.86, I guess we will be ready to embark on the next impulsive lag, and that will be that, and then we'll see if that continues. So I'll be watching, and I'll try to see what would be kind of the next structure. But I guess that would be my thing. This wave one will probably go back here, and then this will be a very short wave two, amazing, and then begin the count again and begin to look on the bullish side once more. A lot of the stocks in let's say in the max sevens, they're still pretty beat up. A lot of them below their 50, like Tesla. I don't even know if Tesla is on there, probably not, but I just watch it. But Nvidia, the 50-day moving average is kind of turning down, and it's been acting pretty bad. Now that I'm looking at this, is this an ABC? We'll see. I mean, I guess if you start to break back above 190, 191 in here, one could think about upside. I wouldn't have anything a problem with that. We know Google is still looking fairly decent in here, and is the one that was holding pretty well. Meta, why don't you measure this move from this low to this high and see? This is a 61. If this is a 61.8, we can have a decent chance that it could try to go. But for me, as long as we're below this moving average, is not actionable. Looking at Apple, that finally has found a little bit of a low. We're going to get into some heavy earnings, I guess, next week with a lot of these. And then Palantir, it's struggling. It's forming this head and shoulder you know, below the 50-day moving average is turning down, so it's going to be hard to fight or to get excited about this guy until he gets back above there. So there's still a lot of things that this market has to work through, Microsoft and Netflix. But look, the small caps, as surprising as it is, they continuing to push higher, and I'm not really a believer that the small caps can really lead the market and But who knows? Maybe these guys will take a pause when the small when the mega caps turn back from the lows. They don't have to sell off; they just can go sideways, and then let's say the mega caps pick up the slack, and then they turn, and then that's how you begin the next bullish leg in the market. A lot of ways to kind of look at this. Silver and gold, it's silver has been slowing down a little bit in here as we're very close to 100, so expect a lot of volatility, I guess, as we're approaching, and the signs of a top are really marked by volatility. If you're getting a lot of volatility near the highs, you know that a top is nearby. If the ranges start expanding and the volume and the buys go up and the sells go down and you have large ranges, a top is very likely at hand. And then you have gold, which again, it kind of got out of its kind of bullish trend in here, and it really spiked. Something to keep in mind as we're getting very close to 5,000. And I guess Bitcoin, I want to touch on that a little bit, but really, this does seem as a corrective move, which you will laugh in my face the moment it would break again back above 98. If it does break above 98, then we are looking probably at the larger low being formed. But for right now, it's just still fighting and kind of sideways, and I would not fault anyone from looking at this and saying, man, this is just a corrective move, ABC, WXY, and then you're looking for a little bit of a further downside, right? That's the nature, that's the way this looks, right? But then if the price action says forget all of that Elliott wave crap, I will do whatever I want to do, then we'll go with that. We'll see. So I'll leave it at that. That's kind of all I have. There's really nothing a lot. I mean, I was looking at the dollar, and it's has sold off. It kind of went back. It's nowhere kind of pushing any direction. And then 10-year yields. So bonds have been selling off, especially the 30-year. The 10-year yields have been going up. Another reason to kind of think, hey, it's the Fed kind of caught in a corner. Are they if they're gonna continue cutting in here, is inflation gonna come back? I know Trump wants somebody that's gonna be very, easy on the trigger for the rates, and what that's gonna do. I mean, these are all concerns that are beyond my pay grade, but it's fun to listen and to watch sometimes. So we'll continue to be here and just look at the price action. We'll see what tomorrow brings, and if yesterday was a head fake and today was the real move, then tomorrow we should continue to go. If we're finding ourselves tomorrow back at the lows and closing at the lows, then we know today was a fade move, and welcome to the stock market. All right, so I'll talk to you guys later. Bye bye.